With Tesla retracing all the way to August 2020 highs, it almost seems like a no-brainer to buy this stock for a long hold. But there actually may be a better entry. Let's go ahead and go over those targets now within this video. What is up, you guys? Thank you so much for stopping by. This is ARCa coming at you with a TSLA, Tesla, technicals and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community, ARCa, on Discord. With that said, let's go ahead and dive right into the charts. So we are looking at Tesla in the 4-hour chart right here. And as you can see with this red line, this is the price indication, the current price. We are currently at, arguably September 1st or August 31st, 2020 highs. So this actually presents a pretty good opportunity for long-term holds. But let's go ahead and look over some of the technicals here so that we can see if there's a potential better entry. Okay, so what I am noticing here is that we are in a bullish formation. This is a falling wedge, and falling wedges do have a positive outcome. So, judging by just raw price action, I can see that the candle structures are indicating a potential continuation to the bottom, particularly with this last candle right here. It has barely returned anything from which what it has lost already. So that we can actually see that the 1.618 is right down here at 175.28, which could be a very, very potential point of entry or a price objective for now. And please remember that we are looking at it as just raw price action right now. We'll go ahead and statistically back the downside thesis for now. Okay, and it also appears as though we're getting a higher tick in sell volume, so we do have to watch out for that, and for the bulls at least, right? Now there are a series of golden means on the way down. The 2.618 is another area of interest, and that looks like it's at about 168.73. And the third and last area, which, I mean, you can see here that it does have the power and the thrust to dip down to lower levels like that. But in the event to where we did face a capitulation event, since we are testing the top or the resistance of this wedge, we can see a dip that's very much in confluence with the bottom of this wedge, which is the support at the 3.618 golden mean, and that's 162.19. Just a couple targets to look out for. Let's go ahead and move on to the next chart and see what we have. So this is actually let's do the statistical side first. So yeah, this is the stats. What I did here was I back tested on the daily chart for Tesla momentum versus volatility profile, and what you're looking at here, new listeners, is volatility represented by this indicator BBWP. Volatility is direction neutral, and in order for us to gain a bias in that direction, or in the direction that the asset can actually go in, we pair it with stochastic momentum. And momentum oscillators like this usually have a pretty good hit rate. In this case, we do not have anything so extreme happening within the volatility profile, but what we can tell is that we are starting a contraction phase, which is usually from when we're at expansive levels up here, and we start the downside movement, which is called contraction. But it is direction neutral, please remember. It just so happens right now that we are starting to pivot towards the downside alongside the volatility. So we are being suggested on the daily chart a continuation to the downside. Now, the back test actually came from only the stochastic momentum oscillator, and our current position from reversing is right about here, and we're starting to pivot to the downside. Now, this red line indicates that this is the lowest iteration that we've actually ever retraced from. And these are the indications from which we have retraced from there. And I have back tested every single time we have reversed from these levels right down here, or at least past this line, right? So based on that criteria, we did get a back test variable. So you're looking at a total of momentum oscillator 5 iterations that happened throughout the entire trading history of Tesla on the one-day chart. And out of those iterations, 4 were correctly guessed to the upside, which gives us an averaged upside accuracy of 80% with an averaged upside thrust of 18.465% over the span of 27 days. This is proof of work. Now, we do need to meet a criteria here. We actually absolutely need for the momentum oscillator to finally make its dip to the bottom and correct. The dip to the bottom that I'm talking about is very much in accordance to what we're talking about here, about potentially testing one of these 618 targets right over here. But looking at this in a discretionary manner, it looks like we do have quite some room to still fall. And that leads me to believe that the 2-spot 618 or the 3-spot 618 may be the more probabilistic targets for us to consider hitting. Please don't mind these horizontal lines. These are just me looking at potential channels that we can be in while trading this range of what's called a broadening descending wedge. This is usually a trend reversal signal all on its own. But we have been riding this wedge since November 3rd, 2021. So it's been just a little over a year of riding this this descending wedge, and it's very similar to the SPY or to the broader markets, which can tell you that Tesla and a lot of other things are very much running sometimes running in sympathy to the broader market spectrum. So at this point, I have these this resistance. I'm sorry, the support range down here, because this can essentially be the actual place for demand. I thought that this could possibly be one, and I can see why people are rejecting it as a full-on demand. And it's because if we reach these lows or the highs from August 1st, 2020, or September 1st, 2020, we can actually see a potential test of the support from the wedge and a continuation onto the upside. And in doing so, from our statistics, we can actually realize this dip all the way down here and then make a corrective move towards the upside. We can actually start a contraction phase from a lower level of the volatility and also have the momentum pitched to the upside for an upside move. We can apply these metrics once we do that. They are basically useless until we do get the criteria met. Apologies. Okay, let's go to the last chart for Tesla. This is going to be our RSI analysis. So on the 12-hour chart, which is, usually in a higher time frame is where you want to catch divergences. So we can see that. Okay, look, I want to be able to show you some potentials here, but I can't actually verify them unless. Yeah, you know what? I'm not gonna do this just yet, because I want to make sure that we do solidify the next 12-hour closure. Upon the next 12-hour closure, I'll be able to show you some serious hopium for Tesla, but I don't want to call that just yet. I will keep up with this. Okay, so let's go ahead and open up a multi-pane. What I can tell you right now is that the 12-hour RSI is suggesting a continuation onto the downside. I have also made a drawing here, or a depiction of what the RSI properties are for my RSI, right? So this is the upper half is the bullish control zone, the bottom half is the bearish control zone. Okay, so now let's open up a multi-pane to see exactly what Tesla has to offer, starting from the immediate short-term time frame. So let's go ahead and pull these back just a little bit so that we can see it clearly, and make sure that this one is also large. So we'll start this one with a 30-minute. We'll make this one the bi-hourly. We'll make this one the 6-hour. And since we already saw the 12-hour, we'll do the daily here. So the immediate short-term time frame is approaching a very shallow area, or the deep areas of the bear weakness percentile, which usually means that we can actually be gravitated into bear strength. Let's look at a micro time frame, 15-minute. 15-minute is definitely now beyond the shallow areas of the bear weakness percentile. Now it is suggesting a slight downside, which could be in accordance to what we're talking about here, testing these levels right down here. Okay, so now the 6-hour RSI, what is it suggesting? Let's see. Okay, the 6 hour RSI is definitely within bear strength percentile. It does have a slight downside pivot. We are getting a hint from the moving average right over here that it is a downside continuation suggestion. So we do have to kind of give that some weight since it is a larger time frame. It is 6 hours. The daily RSI is absolutely suggesting some downside well within the bear strength percentile. Okay, we are also beneath. The purple line is the RSI signal line, and this is the RSI moving average on a 14-day period. So we are absolutely below the moving average and very, very much within the grips of the bear strength percentile. So, judging by this look, see how they're not so pivoted toward the downside. We can see a potential slight downside tomorrow, Monday, and followed by a deeper correction Tuesday. And now I imagine that this is potentially still the overall sentiment pricing in what the FOMC is going to be releasing on Wednesday the 23rd based on the economical data that has been released as a beat. Fed Bullard actually said that he, in it, just us believing that we need a Fed pivot, that in and of itself actually would be a reason to continue rate hikes. So that's actually really something to sink in there. But anyway, I think this is a pretty good place for me to leave off this video. With any questions or concerns, please make sure to reach out to me within Twitter or Discord. I'll make sure to leave the links in the description below for you to consider joining the trading community in Discord ARCa. But with that said, I wish you a good night, and I will catch you at the bell mañana. Adios.